Hey guys, welcome back to the Weekend Trading Edge video. As always, I'm going to share some of the top trading opportunities that are on my radar for the week ahead. So let's hop in. We're going to start with the shiny stuff this week, gold. And we're going to start here on the weekly. Now, gold has been on a bullish run for pretty much the beginning of the year, and that is correlated with the fact that we started this year under the impression that we are going to be reducing interest rates. Again, the year started with this historical outlook of interest rate cuts, and let's just say things have changed to the fact where the FOMC minutes just came out this past week, and there were even a few Fed members saying, hey, should we hike? Right? So things have shifted, and we're starting to see that shift in gold. And this week, I think, was the biggest decline in about a year from gold. From a technical perspective, what we have here is a double top. We have a double top with RSI divergence. Now, for you guys that are new, a double top is this, right? Price action makes a run up. We eventually get to a top number one. We then retrace, get a little bit of relief as a normal trend does, takes a second to breathe, and then we try to make a rally in which we would expect to be an extension, but instead of extending, we hold again, giving us a second top. RSI divergence is, and divergence in general, but I specifically use the RSI, is looking at how our indicators line up with these double tops. You can see that there's a massive discrepancy in our RSI on the first top, which is all the way up here, 89, close to 90, and the second top, which is below my overbought area. So divergence is another clue, I don't want to say sign, a clue that we may see some relief in the market. Now, as we go down to a lower time frame, let's talk about how you could potentially trade this, right? So it's a little bit late to enter the double top right now, right? We've already come off the highs. You're entering pretty much at the lower third of it. So I wouldn't necessarily, if you're a seller, be looking to sell there. What I would look for is to sell the violation of the V point of our double top, right? So this is top number one. This is the pullback. This is top number two. See how it's shaped like a V? I call it the V point because I don't know any other technical term from it. I don't know, the valley that starts with a V. So yeah, the V point. And this area is going to be important for a few reasons, right? One, from a technical perspective, right, if we violate this level, meaning break and close below, that's going to confirm the double top, and that's going to confirm that we should see a continued bearish move off of here. From more of a price action kind of philosophical or psychological perspective, it means this. So right now, the net positioning in gold is long, right? More traders are long gold than short gold, right? In fact, if we take a look at Daily FX's IG client sentiment thing, they'll tell you that retail traders are about 62.3% net long gold, and then whatever is left to make 100 short. And if you look at the little graph underneath here, typically the way you read this thing is you want to do the opposite, right? So you see that blue line goes above the red line. That means buy, 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 buy. When that is in a buying state, you probably want to sell. And that doesn't make that much sense, but trust me, when you understand that 90% of retail traders fail, it makes more sense on why you may want to do the opposite. Now, obviously, you don't want to use this in its own right. I've never tested just selling it every time it goes blue and buying it every time it goes red. It's not that simple. But just like the different clues we use in the market for technical analysis, this can be an added clue that you use to build a case for entry. Now, back to the psychological perspective of this, right? If we're seeing that 60+% of traders are bullish, and then again, let's put yourself in a bullish seat as well. Well, where are your stop losses at? Well, if you got involved anywhere in here, up here, you probably got some stops, right, sitting right below here. You're saying to yourself, okay, well, if price action can violate that level, this is where I want to get out. So if we can violate this low right here, if we can stop out some of those previous buyer traders, right? Well, what type of orders are now sitting in there, right? Sell orders, right? One, previous buyers that have stop losses, right? Those stop losses are sell stops. And then current buyers that are, or current sellers, excuse me, that are saying, hey, I was waiting for this violation to get involved to give me another signal that we might go short. Those are also sell orders. And what we're going to see is a shift in the balance of buy orders into short orders on the way down. Now, with that being said, I am not in any favor of, I guess, a long-term play here. There are a few levels. I'll give you a short target and a long target, or a target 1 and target 2, I guess you can say, on where to look for. But in no way short-term or long-term am I saying I think we should be bearish gold. We're at a very interesting kind of state right now with economics. We'll see what happens. We have a major news event coming out this Friday, which is a sucky day to have a news event. PCE, which is directly related to inflation. Inflation is directly related to interest rates. Interest rate policy is directly related to what we see on the charts and the strength or weakness of the dollar. So we'll see what happens there. But if we're looking to go down and just play a little bit of relief in your typical counter trend trader mindset, remember, counter trend traders looking for short moves, in, out, grab a piece of the cookie and then escape, and don't get your hand cut off. The first level that I would look for is a move back down into this zone right here. So we're looking at what, 2,280 down to 2,225, something of that level. And then the lower level would be right in here, right? Initially, I looked at this level as well. You guys know how I'm super conservative and scared of anything that involves rejection. But if we throw some volume up on our chart, and I'll go from all the way down here so you can kind of get a good idea, you're going to see that our biggest level of interest, right? Volume is synonymous with interest. Our greatest level of interest is going to be right at this level right here. Let's say it picks up right at the top, right under 2100, right? So that can be a secondary level anywhere from here down into, I would say, I'd go above 2K, maybe right here, 2030 is a good level for a secondary target. So things to consider with gold. And of course, right, as we spoke about in the live room, which doesn't help this video because most of you guys weren't in the live room, understand that we're not doing analysis for buyers or sellers. We're just doing general analysis, and the same general analysis that we would use for targets as a seller, well, that's the same analysis we would use for potential entry locations as a buyer. And that's why there's no such thing as bullish or bearish analysis. If you're a good technician, you can be dangerous no matter what side of the market you're on. So these same levels, right, even starting up here, would be levels where if you are a bull looking to be a buyer, maybe for longer term investment reasons, that's as close as I can get, this is a level that you'd look for price action clues to see if this downward move is going to end and a potential to go back up. And this other level, Moo, right, is another level where you would look for, right, deceleration to the short side and a chance for your next pullback for a continuation up. So we'll probably review this in the future if it comes down to it, but that's my idea on gold. Next up, we're heading over to the Kiwi, the New Zealand dollar, and we've got an interesting setup here. It's not my favorite trade setup in the world, but it's something that's worth talking about. And on this channel, I'm not just here to give you signals. I'm here to help educate you in the market. By the way, subscribe if you're new, if you want to get some constant and consistent education. Been doing this for like, what, 10 plus years? Gosh, I'm old. But New Zealand dollar, we've got an interesting scenario happening. You can see that price action has recently been in a little bit of consolidation. This isn't surprising if you look around the market. We're starting the summer. We got some stuff coming out. A lot of the pairs have been like this. What's interesting about New Zealand dollar here is that if we go down to the 4-hour chart, we actually form one of my favorite patterns in the market, and honestly, one of the best technical patterns that you can hope for. And it's going to be called the high and tight flag. If you watch the midweek video that I did midweek, you'll see that we have the flag pull up, right? The move up. And then we have this sideways, got to adjust this a little bit, but this sideways consolidation, this sideways channel. And this is a pretty decent move in the market, pretty easy to read as well, because what's going to happen is we're going to break out. Now, which way we break out, that's up to your overall analysis. In general, a high and tight flag should break out to the upside, low and tight flag should break out to the downside, but each situation is a little bit different. So why is this not one of my favorite opportunities? Well, location. Although we do something very delicious, which is right here, right? And again, just going back to it, the high and tight flag is kind of like an imbalance. There's imagine it being like a doji candle. There are buyers and sellers kind of both interested. No one knows who's in control. They're trying to figure it out. In fact, if we go back to what the daily FX sentiment thing, will probably be neutral. Let me see if I can bring that up. I'll edit it in later. Yeah, you can see we're pretty much neutral. Retail traders show 52%. Boom, right? So why this is not the greatest situation is this, right? One, this does come after a clear break of structure, which is something I absolutely love. LOVE, mwah, right? It is what I need as a structured trader, because not only does the higher high, higher close give me a signal that says, hey, Akil, you can predict a continued move upward. Yes. But the retracements actually come back to that level. So it works just like a pullback trade. And I have a very delicious spot to hide stops underneath. The problem, right, is this. In every trade, we want to know three things: entries, stops, and targets. Entries are how we're getting into the trade. Stops are where we need to be protected. And then targets, we want to make sure there's enough room to make the money, because that's our goal as traders, to make the money, right? If we look to the left, look left structure leaves clues, we're not at the greatest area in the world, right? We're not at a clear level of structure, but we are in this weird little consolidative state where the market did this little bouncy bounce, and there's not a clear path higher, and that could be an issue because there's not a clear path to take targets. Now, with that being said, right, future actions do give us clues about past results. We saw something very similar not too long ago, right? If we look back down here in late April, we had the same situation where we had a move up. We had a consolidation pattern right here in the form of a pennant. Same thing. If you look at what we did, one, we were above most recent structure and came back to retest it. Two, the highs are right at a previous level of structure, and we ended up blowing right past it. So unfortunately, that doesn't change my opinion on it as far as the outlook, but it does give you kind of a past result, something comparable to look at for this situation. So my opinion and how I would personally trade it, if I'm looking to get involved in this, I would only be looking to get involved at a retest of the lows, right? Because I don't have a big extension, what I would like to do is I'd like to get involved at a retest of the lows. I'd like to trade it up across the channel, take a T1 out, if I can find some money sign up here, and then I'm willing to be more risky with a target too, but I'm not willing to be risky with my first target. So cool opportunity on New Zealand. This next one's gonna be short and sweet. Seems like we've been keeping up on it every week. So if you're not tuned in every week, shame on you, you should. So this should be familiar. Euro Canada, right? Waiting for this for a very long time. We have the break. We know where we're shooting for, so we'll make it short and sweet. What we got this week in the market is we got a pullback. We had news coming out for Canada and the ECB, which is both interesting because both currencies are looking to cut rates. Now, for the ECB, there was the idea that 3 rate cuts may be in the fold this year. They've kind of walked that back to 2. But with that being said, that 2 still may come, and I might be wrong in this, I think June and September, something like that. Canada, on the other hand, where we were almost banking in a rate cut in June as well. And I think Canada came one day before the ECB, if I remember from last week. Last week's video, I kind of spoke about it all. Well, based on the news that came out this week from Canada, they may be pushing that back a little bit, maybe thinking July or some sort like that. So there's been some weird fundamental stuff that has happened here. And I may have that reversed, but we'll see. Anyway, from a technical perspective, we've had our break and close. We're pulling back into another delicious level, right? Look at the wicks here. Look at the legs on these candles, right? Rejection, 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 rejection. A hold right now on our previous candle to end the week. If we can get a nice reversal reason right here, I think this is a no-brainer place to enter if you're someone looking for those longs that we've been stalking forever. Pound Canada is a little bit similar, breakout as well, a little bit of a different situation, right? The Euro Canada was more like a head and shoulders type of deal. The pound Canada was this ascending triangle. My second favorite pattern. Matter of fact, this is my favorite pattern, ascending and descending triangles. High and tight flags are my second, right? So pardon what I said earlier. But sort of the same situation, right? We don't have a massive amount of room from a technical perspective to go higher. But this is also a weekly chart, so keep that in mind. We do have room to go higher. So again, higher high, higher close right here. If we go down to a 4 hour, you're going to see our deceleration pattern, right? This rising channel. What we would look for is a little bit of relief. We came to our first level right here, but we could go a little bit lower. So as always, wait for clues and then look for that pullback up to that next level of structure right here. So nice pullback trading opportunity here on Pound Canada as well. Now for a little bit of continuation action, we're going to be on Aussie New Zealand. Well, it's kind of technically a counter trend move, reversal of trend, whatever. We're looking for a move down here on the Aussie New Zealand, right? Bigger picture, Aussie New Zealand is in consolidation. Would not shock me, honestly, if we went all the way back across the channel, or at least to this little midline right here. Now, we're going to pick out a target that's a little bit above that, but just keep that in mind for you guys that are a little bit more aggressive. So what we've done here is we've had a rotation. We've had a big bullish move up here. We've had a retracement. We've had our continuation. And then what we did is we've taken out these lows, similar to what we're looking at in gold. That gives us a rotation in trend. Now keep in mind, this is a rotation in trend within a bigger consolidation. So blah, 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 all that funny trend stuff. Basically what this means is that we're no longer expecting a bullish continuation, but I would expect a move lower with, hence the lower low, lower close. Now, the next question is, if we're going to expect a move lower, then where are we expecting a move lower to? I gave you some levels just based off of structure, but I also want to do this. I want to bring in some Fibonacci tools. I want to take an inversion, right? So I want to take my Fibonacci tool and move it backwards from swing high to swing low, right to left, instead of our normal left to right. You're going to see that our 1618 Fibonacci inversion lines up right here. The 1618 is the golden mean. I also want to take my Fibonacci retracement and draw this in more of a traditional way from my swing low all the way up to my swing high. And you're going to see that we have a 618, another golden mean right at that level. So 107.50s is a really decent level to look for a price to come to. And again, we can go a little bit lower as well, but I think that's a very safe level, first expectation. And as always, right, broken record alert. If you're new, can you guess my trading style? It's not fancy bells and whistles. It's not kind of shiny stuff to get you all excited and pumped up. It's basic, classic chartist, technical analysis, price action trading type stuff. I'm looking for a pullback. I'm looking for a little bit of relief, which you'll see on a lower time frame. I'm looking for a pullback to wherever that comes from. The higher the better for me. And then looking for an extension down. You can see here on the 4 hour, right, we're already starting to get a little bit of relief. So that bearish move is starting to lose steam. RSI went oversold, starting to see a little bit of divergence with our RSI going down, our price action, RSI going up, price action going down. Wouldn't shock me to see a little bit of relief as we start the week. And then we got to wait for that relief to end, looking for our price action clues, and then look for that continuation downward. Like before you leave, subscribe if you haven't done so already. If you have any questions or comments, leave them below. I'll see you guys next week. Until then, plan your trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.